All right. Not long ago, I posted an analysis on Bitcoin saying that lower prices are still coming. And that was around here, I guess. And lo and behold, it is coming despite bullish news of, adoption from institutions and blah, 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 all that kind of things, right? That doesn't matter. That is just manipulation. So I want to use this opportunity in this video to kind of give a lesson on liquidity and efficiency. I've thought about this before. You can think of liquidity as the fuel for a car, and you can think of efficiency as you know how your car is made, how well it runs, right? So you do need fuel to go on any type of journey or road trip, and you do need a car that's not going to break down, right? So your car has to be efficient. If it's not efficient, it's going to overheat and it's not going to get there, right? Just like the market, it's always moving. So technically what I'm trying to say is it's always getting there. So the market is efficient. If it's not efficient, there is no market. Liquidity is the thing. If there's no liquidity, then there's no market. Okay, so let's have a look at why I came to that analysis and some interesting things that were unfolding. Okay, so maybe I'll go on the weekly. By the way, I use ICT's concepts most of the time, but mainly focusing on liquidity and efficiency and my own few PD arrays, if you know that term, that I've kind of used myself. I use things like wickless candles, such as this. Wickless candles are always my consideration. Okay. But anyway, this is about liquidity and efficiency. So what happened? We had Bitcoin come all the way down 20,000. Yeah. Started pushing up, consolidated in a kind of bullish flag, started pushing up, and then we retraced back down into around this area of support. I would call it an all high. All right, not technical, not the usual support and resistance methodologies. Okay, anyway, we started pushing up, and then we made this new high over here. Okay, let me just make it maybe a bit thicker. Reference, let's make it the color pink. Okay, and then we pushed up here, which is a big green candle on this a weekly chart, by the way, end of September. We did not close above. The next candle actually pushed higher again, and then big drop. I forgot what news that was, but it was a really big drop, right? And then we retraced, and we pushed down, we pushed up, we consolidated in here basically, and then ready to drop. Okay, so I'm going to go down to a lower time frame, and I wanted to take note of trend lines, because trend lines are what a lot of traders use. So there's liquidity around these areas that build up around these areas, and there's the whole theory that the more times the trend line is used, well, around three times is a strong trend line. Of course, if it's used too much, they say it's weak. That's all bull crap, right? But people are drawing these lines, and it's a consideration. So see a tap here. Okay, it starts to create the trend line here. We have a touch here. We get a bounce. So what are people doing? They see that bounce, they're buying. They think Bitcoin's going higher, right? And it's around this area of this all high. So it's liquidity there. Getting built up here, people are seeing this as a potential low. Where are you going to put your stop loss? You want to make money on your position, right? Let's say you get in here. You're like, okay, looks like it's going up. This is when I FOMO in or whatever. Maybe you have a strategy. Okay, no judgment. And you put your stop loss down here. And maybe you're targeting all highs or this high or whatever, 50%. You do target 1 Rs. It doesn't matter, right? But let's just say you're targeting an all high. Because technically, psychologically, people want to target highs and lows. And that's why they, put a stop here. Some people put it a little bit lower. But again, doesn't matter. The main liquidity is at this low. Okay, the main area of liquidity. Because here, down here is in limbo. It's in limbo. Because it's just like a random area. Okay, it's not a significant, it's not a low, significant low or high. Um, so here is where liquidity is, and what does price do? It comes up, it comes down, it takes that, stops out a lot of people. Okay, because they thought this was a low. There's liquidity being built based on this trend line, and then big bounce, very fast, not giving people much of a chance. People will be waiting for a retracement, doesn't come, right? So that's trapping again a lot more traders that are going short. They saw this drop too. So that's people going long. And let's go back to the daily chart. How about people wanting to go short? How about the bears? They see this break, they see this drop, and they see this another break. So maybe they get in here. Or here, doesn't matter, they're getting in. Maybe they see the bounce here, it tries to retest this trend line, and then it drops. It looks like it's going to make another low, but it doesn't in this case. So where are people putting their stops? I don't know, at a high, here. It doesn't matter, they definitely get stopped out. Okay, so bears are trapped, bulls are stopped out. The market continues, liquidity is taken. Okay, and price is being efficient. What does that mean? Price expanded here really fast and has not given traders much time to get in. Okay, compared to like this whole consolidation, traders are getting in the market every day. They're getting salaries, they're getting paid, they're getting impatient. Some people trade every day, some people trade every week, month. Some people, you know what I mean? Here was fast, not much chance for traders to get in, so it's not efficient. Goes up, one more expansion to trap traders, and then it drops. It comes and becomes efficient. It offers price at these levels again where it wasn't offered. So traders need to get in. That's how liquidity is built. They need to get into positions so that they can actually be in the market, so that actually smart money can utilize their positions, right? Because smart money or whatever, if you believe in that, they have to take the opposite side. They need liquidity. They need someone. It's a zero sum game. They need someone uh, to have a position that they can assume the other side of, right? So if they want to go long, they're going to manipulate people into going short, either through technical analysis, fundamental analysis, even in the news, social media. They have their fingers in all of these things. Don't think that they don't. Okay? Life isn't so fair. And, okay. We break the trend line. Good. And look at this. We consolidate. We make a high. We start to drop. Then big expansion again. We take these people out fast. Okay, just, people with their stops here. I'm not talking about holders and all that kind of stuff. But yes, this is it. Does not close above on like the 2-day and above. Barely on the daily on this chart. Boom, fast. People are out. Out on the shorts, out on the longs. One more time. Boom, out. Okay. And look at this. We play this trend line again. People are like, oh, good. Oh, wow. It's a good trend line. Bleh. No. Trend line's stupid. Okay. It works for a bit. Yeah, great. Depends what your strategy is. So you get in here and you put a stop there. Wow, great. You catch a low, you got 2R, that kind of thing. Yeah. But the chart isn't so simple like that, right? And we drop down. And how I see efficiency is I'm looking for gaps and voids on higher time frames. So what am I looking for now? On the monthly here, there's a gap here that I expect to be taken. I'm looking at fibs as well. Price coming to equilibrium, which is around 50% here. I'm anticipating probably coming down to maybe 62 if we're going higher, and then moving up. So I'm using tools like that. Okay, so price has to get liquidity and it has to offer fair value. That's how it's going to continue to moving. Else, unless something is super parabolic and this keeps going, it's pretty much just going to crash. Okay, so I put a fib here. Great. Let's go look at the higher time frames. So I'm looking for gaps, I'm looking for things, order blocks. So we're still in this general gap here. This general gap is an R2F gap, which is a very strong gap for higher prices. So we look, we're at all-time highs. I'm not going to I'm not like a crypto fanboy either, so I'm not going to make that kind of prediction, but this is generally a strong gap, and I want to see how we react here, how we close here on the 2 month candles. Okay, which is another 1 month, so new 2 month. Okay, so yeah, I expect us to go at least into here. Okay, on a higher time frame. On a lower time frame, I'm going to look for inefficiencies to target that area. So if we create a gap here, we could come into a gap. We could start to test this trend line and then come in for price to be pushed lower. We see a lot of equal lows down here, so we might come and take that as well. And who knows, we might just go lower into oblivion. I don't know. Okay, I don't know. How I take trades is based off of liquidity and efficiency, and that's how I would use it. Okay, so I hope you found that somewhat insightful. That's how the market moves. It's not a, some people have these like time cycles and with the moon cycles and things like Wyckoff, which does have some merit, but it's kind of like not really understanding exactly, right? So when I think of the whole market, I think of like this giant machine with so many different cogs of different sizes, and they're all like connected to each other, and they're all moving synchronously, and that's kind of how I visualize it. And I look for liquidity. I look for where is liquidity, where is it being built up, what is likely to happen. When you start seeing the market in this way, you start to think a certain way. Like what's likely to happen? What would really screw people up? What's the news saying? Oh, where's the liquidity? The liquidity is like on lower prices, and the news is being very bullish. You can almost anticipate what's going to happen. So it's a good thing. Yeah. So yeah, that's it. See you next time.